Ladies and gentlemen, Warren Buffett is officially stepping down as CEO of Berkshire Hathaway at the end of 2025. After nearly 60 years at the helm, the Oracle of Omaha is finally closing out one of the most legendary runs in financial history. But his departure leaves behind something even more valuable than a $900 billion company. It is a blueprint for how to build, protect, and grow wealth. In this video, I'm breaking down the timeless lessons Buffett gave us, principles every single investor should understand and live by, all straight from the greatest of all time, the GOAT, Warren Buffett. The first lesson is one of my favorites. It's be greedy when others are fearful. The idea is simple. When everybody's panicking, that is your opportunity. That's your moment to buy. He bought Goldman Sachs during the 2008 financial crisis. He bought Apple when people thought the iPhone had peaked. While other people were selling, this guy, the legend, the GOAT, Warren Buffett, he was investing. Why? Because fear creates irrational pricing, and irrational pricing creates opportunity. It creates margin of safety, and it creates better forward-looking returns when you can buy a great company that's on sale. If you want to build wealth like Warren Buffett, learn to see market pullbacks not as threats, but as opportunities. The second lesson is you should only invest in what you understand. Warren Buffett doesn't invest in things he doesn't completely understand, period. And he calls this his circle of competence. It's actually why he avoided most tech stocks in the early 2000s when we had the tech bubble crash. And it's why he sat out the crypto hype entirely. You're not going to find Warren Buffett buying into buzzwords. He sticks to businesses that he can clearly explain and evaluate. The average investor makes mistakes chasing the hottest, latest trend. The ultra wealthy, on the other hand, they stick with clarity and conviction. If you can't explain the investment in one sentence, you probably shouldn't be in it. That is Warren Buffett's position. And if you think about some of the names he's invested in over the course of the last several decades, Coca-Cola, they make sugary drinks. Apple, they make an iPhone, which is basically a handheld mini computer. You can explain what those companies do in one sentence. When you can do that, you understand what their primary goal is as a business, and that makes it an investment opportunity. The third lesson, time in the market beats timing the market. And Warren Buffett's favorite holding period is forever. He wants to buy a stock on sale, a great company that's going to be here 20, 40, 60 years from today. And he wants to enter into a position as if he's going to hold it for the rest of his life and beyond. He didn't build Berkshire Hathaway by jumping in and out of the market or day trading or even seasonally trading. He built it by holding great companies, fantastic companies, solid companies, and letting compounding actually do its thing. So timing the market is better than timing the market. And this is the key difference between speculating and investing. And even when the market's dipped, I don't care if it was COVID, if it was the Great Recession of 2008, the dot-com bubble, any of those times, Warren Buffett stayed the course. He remained disciplined, and he continued to focus on good quality companies that were trading at a discount. So let compounding work. Interrupting it is the costliest mistake most investors can make. Fourth lesson is cash flow is king. Warren Buffett isn't obsessed with flashy tech or price speculation. He loves businesses that generate consistent, growing cash flow. Think Coca-Cola, Apple, American Express. Why? Because cash flow gives you options. It creates stability, flexibility. It creates compounding power. It's not just about owning the asset, it's about owning the income stream. And one of the greatest things you'll notice about Warren Buffett's portfolio over the course of the last 50 plus years is that I don't think he ever bought an unprofitable company. That was not his lane. And he stayed in his lane. He stayed true to himself. And he only bought profitable companies that were printing cash. So the wealthy, they don't chase gains. They don't chase market momentum. They buy cash flow. Lesson 5 is reputation is everything. And Warren Buffett has always said, It takes 20 years to build a solid reputation, but it only takes 5 minutes to ruin it. And that is so true, right? I mean, you can ask politicians, you can ask CEOs who've made mistakes along the way, celebrities, totally true. And look, it's not just about ethics, it's also about economics. And trust is a currency. It attracts better business partners, better deals, more capital, and all those things leads to even more capital and more capital. And Warren Buffett built Berkshire Hathaway not just on stock picks, but on his reputation as a disciplined, long-term thinker. I mean, this is a guy who went to the same steakhouse his entire life. It wasn't a super high-end steakhouse. He bought the same average run-of-the-mill steak, had the same Coca-Cola. It was just, he lived a very simple life, and he used that simplicity in his life to help him to identify some of the best stock picks and to build an incredible reputation. In business and investing, reputation is one of your most valuable assets. Now, this is one of my favorites. Keep it simple, stupid. No, I added the stupid, right? The KISS lesson. Keep it simple, stupid. Warren Buffett avoids complexity for complexity's sake. I mean, he's not chasing hedge fund strategies. He's not chasing exotic trades. This guy, he invests in easy to understand businesses with strong moats, which means strong competitive advantages, good management teams, and predictable earnings. I mean, this is not rocket science, people. This is just buying good quality companies. And guess what? Boring, while some of these may be boring isn't boring if it continues to make you money hand over fist. As Warren Buffett says, if you can't explain it to a 10-year-old, don't buy it. Most investors overthink. Warren Buffett simplifies. The final lesson is to invest in yourself. Warren Buffett still reads 5 to 6 hours a day. The guy is constantly learning, and he credits much of his success to developing a sound framework for thought, for thinking, for remaining sharp into his 80s, 90s. He once said, the best investment you can make is in yourself. You can't control the market. You can't time the market, but you can control your mindset, your discipline, your education, work ethic, how much time and energy you put into this stuff, but you can't control the market. So focus on those things you can control, invest in those, and you're gonna be much more successful. Long-term wealth starts with long-term thinking. The bottom line, Warren Buffett, unfortunately, the legend, the GOAT, the greatest of all time, he's stepping down, but his philosophy is going to outlast his tenure by generations. You know, in a world that is now obsessed with speed, he showed the power of patience. In a world that's addicted to hype and momentum, he proved the value of staying true to your principles. And in a world full of noise, he stayed focused on what really matters. Buy great businesses. Stick to your circle of competence, what you know. Let compounding do the work. And always play the long game. Buffett didn't just build a portfolio, he built a playbook, and now it's ours to use. If you learned something from Buffett, or if one of his lessons helped shape your financial journey, drop it in the comments below. And if you want more timeless investing wisdom, hit the subscribe button, like this video. I break down the markets, the economy, and the psychology behind smart wealth building every single week.